In October 2024, Porsche unveiled the 2025 911 GT3. The naturally aspirated flat-six still screamed to 9,000 RPM. The exterior tweaks were subtle, and the performance improvements were marginal. Within 48 hours, one number captured the shock: $224,495. 5 months later, the answer became clear. Loyal enthusiasts were walking away, and some permanently. This is the story of how Porsche pushed too far and how a brand built on enthusiast loyalty gambled that relationship on an equation that hadn't been tested yet. By 2024, Porsche faced a problem most luxury brands dream of having. They were selling every car they could make, but their massive investments in electrification were starting to squeeze their bottom line. In fiscal year 2024, Porsche saw its first major profit dip in years, as the cost of launching 4 new models simultaneously hit the books. Leadership knew they needed a lifeline to protect their legendary margins. To the executive board and the parent company, Volkswagen Group, the 911 wasn't just a sports car, it was basically pure profit. Industry analysts revealed the staggering efficiency of the 911 production line. On high-end trims like the Turbo S, Porsche was netting a profit margin of approximately 27% per unit, far higher than the industry standard. While a dealer might only see a fraction of that, the factory in Stuttgart was printing money with every chassis. The numbers revealed the depth of the opportunity. Global Porsche deliveries had climbed to a record 320,000, 221 units in 2023. In the first half of 2025, US sales jumped 5.6% year over year, proving that demand remained white-hot despite 3 separate price increases across the lineup. Meanwhile, the secondary market was doing Porsche's market research for them. Used GT3 models from previous generations were trading at $225,000 or more, consistently above their original MSRP. Porsche looked at their competitors and saw a fork in the road. Ferrari maintained customer loyalty through strict, transparent allocations. BMW offered both electric and combustion options without alienating its core fans. Porsche chose a different path. The assessment: Porsche's customer base was the most price-insensitive in the industry. Finance chief Lutz Meschke stated publicly that the company had a very strong brand and a very strong customer base that gives us the power to increase prices in very challenging times. Leadership made a decision. Rather than maintain the relationship with the enthusiasts who built the brand, they would test how much those customers would tolerate. This was the Road to 20 strategy, a push for a 20% return on sales by prioritizing high-margin luxury over volume, profit over loyalty. They called the strategy value creation, but the backlash that would arrive just months later on forums, in dealerships, and in the sales data would suggest something had gone terribly wrong in the execution. In March 2023, Porsche announced a transformation in its pricing strategy. CFO Lutz Meschke warned analysts of significant price increases coming to protect the company's ambitious Road to 20 program, a target of 20% operating return on sales. The strategy had 3 core components: implement 10 to 15% price increases across the model line, add incremental increases every 3 to 6 months, citing market conditions, and leverage dealer allocation scarcity to maintain demand. Meschke explained the approach: we have a very strong brand that gives us the power to increase prices in very challenging times. The company pointed to tariffs, supply chain costs, and regulatory requirements, but internal documents revealed something else: record profit margins. The escalation unfolded methodically. The 2022 911 GT3 carried an MSRP of $162,450. By 2023, that figure had climbed to $171,500, marking a 5.6% increase. The 2024 model year brought another jump to $184,550, adding 7.6% more. Then came 2025, and the number that would shock the enthusiast community: $224,495, a staggering 21.6% increase in a single year. In just 3 years, the GT3 had increased 38%. from $162,450 to $224,495, a $62,045 jump. Add the optional WISAC package, $19,330, and magnesium wheels, $16,820. And enthusiasts were looking at $260,000 plus for what was essentially the same car. That put it dangerously close to the GT3 RS $244,995, a far more extreme track weapon. But the sticker price was only half the battle. Then came the allocation firebreak, a period of deliberate supply constraint. Dealerships received fewer GT3 units than demand warranted, pushing wait lists to 24 months. Longtime collectors who had stayed loyal to the brand for decades suddenly found themselves 18th on the list, stuck behind VIP spenders. If you wanted a GT3, you had a grim choice. Pay market adjustments of $50,000 to $100,000 over MSRP, or walk away. Leadership believed this shortage was necessary. The logic behind it was simple. You can't maintain premium pricing while flooding the market with inventory. To justify the 2025 hike, Porsche pointed to engineering. Suspension bits from the RS, revised camshafts, and shorter gear ratios. But the headline stats told a different story. Horsepower remained stagnant at 502, and due to stricter emissions and new catalytic converters, torque actually dropped from 346 to 331 pound-feet. The 2025 GT3 was more expensive, slightly less torquey, and far harder to get. Within 48 hours of the October reveal, Porsche would find out if they had finally found the limit of the enthusiast's wallet. October 18, 2024, Porsche revealed the 2025 911 GT3 pricing, $224,495. The automotive media erupted immediately. Motor One's headline, the 2025 Porsche 911 GT3 is inexplicably way more expensive. Car and Driver, is the 2025 Porsche 911 GT3 worth its $40,000 price increase? Renlist, the heart of Porsche enthusiast community, exploded with responses. Pricing was already getting outrageous, but this is ridiculous. I have a 2024 C2S and I don't think I would buy it again. And I don't see myself being a repeat buyer for the 994. Sorry, but the car just isn't that exciting at this price. You can get a 670 HP Z06 for the same price as a base Carrera. Porsche prices are going through the roof. The criticism centered on a specific disconnect. Minimal improvements justifying massive price increases. The 2025 GT3 had the same 502 horsepower as before. It weighed 17 pounds more. The exterior changes were subtle, yet Porsche was asking $40,000 more than the previous year. What made it even worse was that just weeks later, the broader pricing strategy became clear. In late 2024, Porsche confirmed another wave of price adjustments across the entire lineup, averaging between 4% and 8%, citing increased manufacturing costs and the transition to hybrid powertrains. By the end of the year, the trend continued. For the 2026 model year, industry data showed a third incremental hike of approximately 2.3 to 3.6%, pushing the barrier to entry for the 911 brand to heights never seen in the company's 75-year history. Even the base 911 Carrera had jumped from $101,100 in 2022 to $120,100 in 2025, a $19,000 increase in 3 years. Forum users began documenting the dealer experience. Dealer wants $10,000 over MSRP for a Carrera S allocation. In the past, I got 5 to 8% off MSRP from this same dealership. Dealership told me I'm 18th on the list, and if I did get an allocation, it would be $50,000 or more over MSRP because all their sooner allocations are selling for over $200,000. Porsche USA response was, "We have no control over our dealers." The allocation system had become a loyalty test, and longtime customers were failing it. One 73-year-old enthusiast shared, "Their big spender customers get all the early allocations. I'll never see that car." From January to March 2025, the market data provided the answer. According to dealer reports and enthusiast tracking, something unprecedented was happening. Porsche customers were walking away. Porsche's response was straightforward. Demand remained strong. Sales were up, 5.6% year-to-date. Every GT3 built was spoken for. The strategy was working, but it raised a bigger question. At what cost to brand loyalty? What competitors were doing differently? Ferrari maintained an allocation system based on history and loyalty, not just the deepest pockets. BMW's M division launched the M4 CSL at a $60,000 premium, but justified it with massive weight reduction, shedding 240 pounds, and unique engineering like a titanium silencer and carbon ceramic brakes. The pattern was clear. Successful luxury brands respected the relationship with enthusiasts while increasing prices. They justified increases with tangible value. However, Porsche had chosen to tell their most loyal customers, "You're not valuable enough." The real impact finally emerged in the 2025 sales data. Globally, Porsche deliveries plummeted to 279,449 units, a 10% drop that marked the largest annual decline since the 2009 financial crisis. The collapse was global. In Europe, sales fell by 13%. In China, the world's largest luxury market, Porsche deliveries crashed by 26% to just 41,938 vehicles. Even the 911, the invincible icon, saw US sales fall from 14,128 to 13,574 as buyers finally hit their limit. Multiple dealers reported customers canceling allocations or switching to certified, pre-owned to avoid new car pricing. Unlike Jaguar's leadership changes, Porsche's executives remained in place. However, inside Stuttgart, the alarm bells were ringing. CFO Lutz Meschke warned of profit margins dipping as low as 7%, far below the 20% Road to 20 target, citing the cooling of the EV market and the friction caused by aggressive pricing. Meanwhile, Porsche's stock headed for its steepest weekly decline since its IPO in 2022. While the luxury sports car market remained healthy for brands that respected their core, Porsche was learning a hard lesson. You can't price a sports car like a Veblen good if your customers still remember when it was a tool. The question became, what exactly went wrong?